Alrighty. Welcome everyone to this month's webinar. It's Ask the Expert, live Australian mortgage and tax Q&A for expats. Thank you very much for joining us. I am America Josh. This is one of the most common questions we get for a lot of the people that move to the US and live in the US and might have plans to move back from the US to Australia. And it's one of the questions that has quite a lot of nuance. I can see Pau already nodding. Like there's a lot of moving pieces and there's, two countries involved. So whether you are looking to just get on the property ladder, whether you're planning on an investment, whether you're looking to buy something with the plans to go back to Australia at some point in the near future, we're going to cover a whole range of topics from the very broad to some of the more specific nuances that you need to know. There is a lot of conflicting information that you'll find online. And one of the first questions I'm going to ask Pau is sort of one of the ones that confuses a lot of people right out the gate. So we're going to try and summarize all of the information. We've got your questions. We've compiled those into something meaningful so that we can really try and answer a lot of those while we go. You can drop a question into the Q&A section, or you can add some comments. We'll happily have a look through those as we go along. I'll try and ask Pau as we go along to clarify any questions that you might have, or at the end, we'll have a bit of a section. So if anybody does have any particular questions they want to ask, we'll have a chance to answer it. I do, before we fully kick off, I do want to share my screen briefly. Because we do have a general advice disclaimer. The information in this presentation is provided for general information purposes only and does not constitute financial advice, professional advice, or personal guidance. It is of a general nature and does not take into account your individual objectives, circumstances, or needs. You should not rely on this information as a substitute for obtaining specific financial or professional advice. Before making any decision or taking any action in relation to your particular circumstances, we strongly recommend that you seek advice from a qualified financial professional. Neither Pau, Odin, Josh, nor America Josh accept any responsibility or liability for any loss arising from reliance on the information provided in this presentation. That's the super fun part, Pau. I love that we start with that, but it's important because we want to make sure that everyone gets something good out of today. But there is a lot of nuance to this, so we want to make sure that people know that getting individual advice is always going to be the absolute gold standard. Pau Lam, we've worked together before. We've done some great things, but do you mind introducing yourself and what you do and what Odin Mortgage and Tax does?
Yeah, thanks, Josh, again for having me tonight as well. So, by the way, I'm calling you guys from Hong Kong. So, there's now East Coast is what 13-hour difference, I believe.
I love it.
So,
I love it. Opposite side of the planet.
yeah. So yes, again, what we do, myself, I'm a tax agent, simply Australian tax agent. We assist from Odin, we assist Australians, predominantly Australian expats who are living overseas in the US, UK, Hong Kong, Singapore, UAE. These are like top 5 regions where our clients are staying. So we assist in a way of helping to mitigate their property investment journeys back in Australia, in helping to secure finance with the banks, because the rules are quite different, and sometimes you might heard bad news from they say, hey, no, we can't do anything for you, which is not the truth sometimes. And we help in that space, in also in a structure perspective, to make sure if you think about investing back in Australia, you need to know about how does the tax run between back home in Australia and how does it imply in your local jurisdictions in the state as well. So we assist in that special space. It's quite a niche market and for us, but we've been around the area for about 5 years. But myself came back from Sydney, back to Hong Kong for 11 years, being an expat myself. So doing
You've
the
lived
same
it.
thing literally.
You know it well.
Yes, exactly. So boring for tax. I don't want to say it's helpful, but it's important at the same time that you need to know what happened, how does it apply to yourself. For someone now living overseas, tax rules are quite different in that space.
Yeah, and it's a really important one to start with, is that the planning in advance and not putting your head in the sand and hoping that all of the obligations and things will go away
Exactly.
is so important, because you can take advantage of this. You can do a really effective job of purchasing, and we'll go into the details, but really getting out in front. All the people that are joining, it's great to see you all here, because being part of these kinds of things is going to help immensely. So as I said, we're going to start at 30,000 feet and we're going to zoom in. But what I want to start with is this idea of, we had one question that was, straight up, I've read something that only citizens and permanent residents can buy houses in Australia. So what I want to start with is who can buy property in Australia, and does it matter where you are living?
Yeah. So I think really just misunderstanding. When sometimes when they use the word citizen, tax residents, it's very confusing. When you look into it from a tax perspective or from like finance, other side. So but the truth is, as long as you're Australian passport holder or anyone, actually literally anyone can buy property in Australia. So even though you are an Australian living overseas, it doesn't limit you from having access to the Australian property market. And more importantly is you can buy anything that you want. It doesn't limit to either can I only buy new property or can I also have access to the second-hand market? So it's the same rules applied to people living in Australia. So you are not being discriminated or penalized just because you are Australian living overseas enjoying your expat life.
Okay, so there's I know one of the acronyms that got thrown around was the FIRB. Do you mind just quickly explaining that and how it? I know you sort of said like it doesn't relate, but I just want to make sure that we sort of really point it out.
Yeah. So this FRB, the full name called Foreign Investor Review Board application. So they introduced around 2017, if I'm not mistaken. During the time, they have the intent to restrict foreign investments into the Australian market, property market. And how does this FIRB work is, again, it doesn't apply to Australian expats as long as you are passport holder or PR. It only the whole purpose of this FIRB is to restrict the foreigner who hasn't have any passport or PR and who want to have an investment in Australia. So again, if you're Australian, you don't have to worry about the FIRB. Or however, like the rate has currently gone up to like 30K. So we
Okay,
don't have to worry about the 30K. There's a special situation maybe if you and your partner, like you're an Australian, but your partner is non-Australian, right? So that would have a small implication. Still, your partner don't have to pay the 30K, the fee as if you're going jointly on the purchase. So to look at the relationship between you two, okay, at least there's an Australian involved,
got it.
then you can also get exemption as well.
Okay, so for most of the people who are tuning in and watching this video, if you're an Australian citizen living in the US, you are allowed. You are, as you said, you have access to the full market in Australia. So for a lot of the people, they might be on E3s. I know we had one question of someone transitioning status in the US. Are there any implications, or does it like matter your status abroad, or like being a permanent resident of another country, for example?
Yeah. So um, from maybe from a lending perspective, it doesn't have any impact actually. The bank really want to know two things. Your income and do you have a visa to stay in the state? It can be a E3, it can be a green card. So it doesn't really matter to the bank. And then from a tax perspective, it runs the same as well. So not because you're on E3 or you eventually turn to a green card later on, it would change anything. It's the same rules that applies in terms of the ability to buy a property in Australia. From
Okay,
Australian side, they're more looking at your Australian status rather than your overseas status.
got it. Okay, so yeah, it's again just the citizenship or the permanent residency of Australia. It's a check. That's sort of all they're worried about on that side.
That's right.
The obviously, and there's going to be tax things that we're going to talk about, and I want to save the tax because I've got a bunch of questions around that. So you're allowed to buy, you've got access to the full market. I guess the fundamental difference from my understanding, I guess, then is it's the ability to get a loan, right? It's like who's going to lend money to someone who doesn't live in Australia. I imagine that is a different calculation for lenders and banks. So do you mind giving a bit of a landscape of like for Australians living in the US, what do lenders look for? Yeah, what does it look
Yeah.
like?
Yeah. So lending is definitely still accessible for Aussie expats living overseas earning USD, for example. But it's not that easy compared to people living back in Australia. You might have like hundreds of lender options you can have. You can talk to any banks. They are likely to offer you a mortgage. But when it comes to foreign income, the bank run completely different policies. So we have further reduced the number of lender in Australia who can offer you a mortgage. So just a change as well that we have seen. Maybe same time, like roll back 12 months back, we might have around 20, 30 lenders still offering. But over the 12 months period, we do see small reductions. Some of them just say, hey, we couldn't do it anymore. So we do see a drop on that. But still, we still have the access to the big four banks, for example, CBA, NZ, Westpac, NAB, and more international one, including, let's say, HSBCs. So, and some of the second tiers, they still lend to Aussie expats living overseas, but they run different policies, as mentioned. It's more on how they assess your applications, your income, your living expenses, your credit limits, etc. To consider are you able to have a mortgage, and that probably doesn't hurt you too much on the finance side, and if everything kind of tick the box, then yes, you will be able to secure finance with these banks back in Australia.
Okay, so they do have like a slightly different way of like assessing the value. Is that down to like straight up whether they lend, or is it how much they lend, or is it just sort of looked in a more critical eye?
Yeah, so if I put it into really a few words, is your income, your living expenses, with their calculation at the end, how much you still have left. Can that money be able to repay the monthly mortgage? If everything tick the boxes, then yes, that's how you would be able to secure the finance.
Okay. So from a straight up, like obviously people are earning USD, you mentioned that that's fine. How does the like currency changes all the time? How does that sort of equation fit into it? How do they look at like what you earn in
Yeah.
US dollars as a comparison?
Yeah, so yeah, this is where it comes down to how the bank assess upfront income. So, and every bank has their own different policies, not a standard one that everyone follows. So we would have in terms of the currency, the bank don't really look at the spot rate or how much is the current today's rate between USD and AUD. They more apply methodology, which is either they're going to shave your income because of the exchange rate fluctuations. They want to make sure if there's a movement in the currency, you will be fine. That the line they used to be able to offer and cover the repayments. So they take either between 20 to 40% of haircut. That's what we call. Let's say you have earned 100,000 of income per year. So some of them would do a 20% shading. So meaning you can only have 80,000 of that to be able to include into the calculation. Some of them will put a 40% haircut. So 60,000 of that will be able to be used into the calculation. So, and then further than that, there will be like the income tax rate, which state are you living? Do you pay the state tax, federal, or add up, and then your living expenses to eventually find that go down to the bottom line of what is the net surplus that you have, and how much you can borrow based on that. So it could be quite complex in the space of which bank apply which policy and how much I can borrow. So and sometimes you would talk to a bank and they say, hey, hang on, we can't offer here any mortgage because of just the way they apply the calculations.
Okay, right. So, and it is, and I throughout tonight, I know I will just repeat things, but it is down to the individual bank. The lender can have their own complete set of rules and just say, like, we take a bigger haircut because we think it is important that we sort of adjust this particular ratio in a different way. It's not, there's no standard.
Yeah, correct.
Got it. Okay. The how credit scores are a huge thing here. Like there's getting US credit scores. How does, like, I know that a lot of people would have been building their US credit score. Does a credit score happen like for a person living in the US and borrowing in Australia? Do they look to the US credit score? Is there some sort of other assessment based on, like, I know it's sort of down to this fundamental of how much you can repay, but when it comes to getting a rate and things, does that come down to your credit score in the US, or is there more to it?
Yep. So this is the one of the most funny thing that we find out the difference between US and Australia, right? So in the US, credit score is a good thing. It affect your borrowing capacity.
Yeah.
The higher you have, the better your position is, your
Pau,
financial
I have
position
more
is.
credit cards in the US by about a factor of 25 than I had in Australia. I can tell you that much.
Yeah,
Yes, totally agree.
the US side look at, oh, you have really ability to go to that limit, but then in Australia they see it as a liability. Uh, on the opposite side, they think it in a way of, oh, what if you really spend up to that limit that you have, and that increase your monthly expenses? Then you probably wouldn't be able
It's
to
not good.
pay
Yeah.
back the mortgage.
Yeah.
Yes, so in that way they do look at yeah. So simply putting the word maybe like quick math. 50,000 US, sorry, AUD credit limit on a credit card, for example, will simply reduce your borrowing capacity by like $200,000
Sorry, can you say that again?
AUD
What was
dollar.
how much was, just was your
So
example?
the currency is around 50,000 AUD credit limit
Yep.
would reduce your your borrowing capacity by $200,000
Wow.
Australian. So like
Okay.
5x. Yeah.
Yep.
So you have 100K of credit limit. Simply, you can only borrow
Can't borrow.
500 yet
Yeah.
less. Yes.
Yeah.
So they look at both sides, US and then in the Australia as well. They would do a credit check in Australia to look at even if you have been away for a long time, 10, 20 years, you still have a file in Australia. So they would just pull up the file to see, oh, what do you have in Australia? And they would take that into account. And then in the US, the good thing is the bank don't need you to provide like a credit report. Most of them don't ask you to provide credit report in the US. So they basically just look at your bank statement to see what comes up.
Got it. Okay. So sorry, they pull your Australian credit, but
Yeah.
not your US credit. Is that what you're saying?
Yes, because
Got it.
they can't have access to it, number one, and
Got
then
it.
they simply just rely on the document you provided them. So they wouldn't go too deep into, okay, show me your US credit report as well. Depends on
Interesting.
the bank, number one. Most of them don't do that. They just look at the statements that you provide.
Yeah. Okay. Cool. So you will. So is one of the. I've got two questions to follow up. Is one of the strategies when you're sort of planning, as you said, building US credit relies on you having lots of access to credit. And obviously, I imagine people who might have been here for 5, 6, 10 years would have been like me, collecting credit cards like Pokemon, because it's building my credit score and it's giving me the ability to borrow.
Yeah,
So one of the strategies that you might undertake in the lead up to buying would be to remove those cards, which might damage your long-term US credit score. But if your plan is to move back to Australia or buy in Australia, you might have to consolidate that credit. Is that correct?
that's right. Yeah. Usually you don't have to do it right now. Like, hey, let me just plan first and talk to the bank.
Sure, sure, sure.
The
Yeah, don't
the the
nobody close
common
any credit cards. Just
Yeah,
yeah,
yeah, yeah.
yeah, yeah,
That's too rush. So usually the
yeah.
common way we do it is we obviously run the numbers to see on what level you
How much do
be
you
able to
need, and how
retain.
much? Yeah.
Exactly. And it can be a proposal to the bank, say, hey, okay, if you can give me that credit limit, the amount that I want, I will be reducing my credit card later on. So it's just a proposal to the bank.
Okay, right.
You don't
Yeah.
have to do it immediately.
Right. So they are sort of willing. This is part of the negotiation where you get in there and say like,
Exactly.
okay. What about the second part of my follow up was I've been away for 10 years. My Australian credit, I wouldn't have a clue what my Australian credit like profile looks like. Is there a dormancy element to that it doesn't help, or do they sort of take that into account of just it's probably not been doing much for the last 10 years?
Yeah. So no, as long as you don't have really outstanding
Like
debts, then
bad debt.
that's
Yep.
fine.
Okay.
Yeah, exactly. So they still look at the similar system in Australia. There's a scoring system on what are the rating. They do have if for certain amount that you need to maintain, but in most case, most Australian expats we barely see anyone failing that criteria. So when they pull up the report, they really just want to understand, hey, has there been any bad debt outstanding amount that you haven't paid because of you just don't know that exists? So you should want to have a check on that to make sure like you're having no issue in the past. As long as that's clear, then they will be able to still offer you a mortgage.
Okay. Just out of interest, the because I've been away a while, and I will fully admit I had credit cards in Australia, but I didn't never remember a credit score or a credit profile. I was just basically I'd apply for a credit card, I'd get it or I wouldn't. Is there a way to like if someone was just really early thinking like, hey, I'd love to make sure I don't have any debt in Australia. Is there a way that people can do that and start to build like that knowledge for themselves?
Yep. So you can there's a few website available in Australia that you can go online and check your own credit scores.
Okay.
Most of them offer a 12 months. If you haven't been doing a search in 12 months time, they give you a free one.
Okay,
If you have a
cool.
question, don't know how to find those, come reach out to us. We can help you do a free one as well.
Okay, cool. So yeah, part of the I guess that's a good point. Part of what you offer is like sort of you can have the mediating conversation before you start to approach lenders. You can start to say like, we'll give you the checklist or we'll go ahead and do it before you then go speak to lenders because you want to make sure that you're prepared and potentially planning a little bit further in advance.
Exactly.
Okay, cool. I'm going to check my. Now I'm really curious what my Australian credit looks like because I know my credit score here because I check it way too often because Yeah, it's a whole thing. Okay. We've talked about the sort of the fundamentals of lending. It's a really custom element. It's down to the lender. I know we're going to go into this a bit later, but does that equation, like, I take it Odin has, and I'm not trying to just promote everything you're doing, but like, is the idea that you've got like a catalog of like, we know that this lender works better with this profile of person? Is that kind of like, is that the job that you're doing?
Yes. So again, it's a bit more complex in the state because you have the state tax, you have the federal.
Got it.
Unlike most other country, they only have one income tax rate, right?
Yeah.
So
Wouldn't that be nice?
um, that's a bit complex. So and to the bank as well, like there are different banks who look at just one simple policy to any, like regardless of state that you're living, they just apply the same rate, let's say income tax rate, just set your borrowing capacity. But on the opposite, there are lenient banks who can look at your special situation, which
Okay.
state you live in, how much you pay, to really go down to the bottom of what is your surplus that you can use into the calculations.
Okay.
So in our way of doing that is we run all the numbers first to make sure, like, oh, what are the options? There are always a few banks, like in Hong Kong there are, or Singapore, or like low tax countries, there are banks certainly more favorable for these regions. There is something similar to the US as well. They look at your location and apply different calculations.
Okay, cool. Okay, so you hinted at this before. Obviously, one of the big questions is tax. So I want to make sure we lend a decent amount of time to talking about that. So in Australia, so like if I'm living in the US and my plan is to buy an investment property and rent it out sort of for the meantime, how does that, for an Australian perspective, like I imagine there's probably a lot of people watching that haven't filed their taxes in a while in Australia because they haven't had a need to, they've been not had any obligations in Australia. And this will, well, first off, does this sort of kick off having to file again? And then further to that, what are the, like, just broadly, how does that tax situation work for an
Yeah.
Australian living abroad?
Yeah, good question, Josh. So, very common question, or like misunderstanding. Again,
Everyone's
like,
sitting
hey,
here
I
listening
have
about
been,
this. Yeah, we've been going 23 minutes and people are like, come on, get to the
I've been living away for 20 years outside of Australia. What do I still have to do in Australia? So, um, even though you might not have any income in Australia, I think it's still important that you update the tax office, to make sure they know that you are living overseas and likely to be seen as a non-resident for tax purpose in Australia.
Yep.
This is somehow to protect your overseas stuff, having the ATO to have reached to it. So the longest one I think I've done is 25 years of not submitting a return in Australia since they left. Which
Okay.
kind of makes sense. Back in like 2000, the information was not that transparent, so you don't really know what do I have to do back then when I left.
Sure. The olden
So,
days.
but it opens up, it could be loophole to ATO to look into it, because they would, in their record, they would just see 25 years of outstanding. There could be the late submission penalty, similar to how US look into it as well.
Got it.
So for anyone who haven't been looking into it, yeah, maybe you want to like look back and see, hey, do I have an application? How can I make sure I'm fine? But then being more, I believe most of the attendees tonight would be being someone living overseas for some
Yep.
time, likely to be seen as a non-resident for tax purpose in Australia. It does do have a bit of little difference compared to people back at home. So for being a non-resident, we obviously only need to worry about the tax we have in Australia, the income we have in Australia. Anything you make overseas has nothing to do with Australia. But at the same time, we don't enjoy that some of the benefits. For example, the $18,000 tax refresher in Australia. So we don't enjoy that. We pay tax actually from first dollar. So even though you only have a small income, let's say $100, you still have an obligation to report that $100 that you earned in Australia. And the tax rate also comes slightly higher at the beginning. So we start to pay the first dollar at 30 cents. So every dollar you make, they have to pay 30 cents to the tax office. The high bracket is the same at 45. But mainly for people in Australia or having income in Australia, you might look at the first bracket, which is a 30% range.
Okay, so straight out the gate, it's going to be like, so it is different from being resident in Australia. Like it does add a complication
Yeah.
to. So is that part of the, like when you're looking at buying a place, is that just sort of a number that you just have to say, like I'm forecasting to be away for another 5 years, and then from that point, that will obviously, does that drop back down when you, like, does that equation changes when you become resident in Australia again?
Yes.
Yeah. Okay.
So when you, let's say, have an idea to invest into the property, you likely to collect some rent for investment purpose. So that's the income you then need to report to Australia. Yes, you start to pay from first dollar at 30 cents.
Yep.
However, these we call the negative gearing system still in place for us, for someone living overseas. In a way of, let's say I make 40,000 in rental from that property, but my expenses, including the interest and all the expenses like agent fee, etc., council, water, all included to be 50.
Yep.
So I'm making a 10,000 losses. So then
Yep.
in that way, I'm not making any profit. So I don't have to pay tax in Australia. It's
Okay.
just an obligation that I need to tell to the tax office, oh, this is my position. I don't pay tax. I can have the 10,000 losses to be carried forward to future that to reduce my future income as well.
Got it. Okay. So yes, it triggers an action in, like, you become not a resident of Australia, but you do have to start filing in Australia. So you would work with them to start, like, let's do a backwards check and make sure, your position with the ATO prior to getting involved. Then they would set up their ongoing tax obligations. They'd have to file June 30 every year. They then keep filing. And then once you move back to Australia and become resident, so obviously there's bits and pieces about how you become resident for a tax purpose when you get back to Australia. But once that triggers, then yeah, you obviously readjust, and then you're paying taxes like another, as if you just bought a house living in Australia.
Yeah.
Have I summed that up all right? Okay. To get a little bit deeper, I know that's sort of the federal level with the ATO. When it comes to, we had one question that was particularly about Victoria and stamp duty concessions, for example, that are available in Victoria. When it comes to other kinds of things like that, this particular example, they asked, can I live in Victoria for 12 months and take advantage and then return to the USA? How do those sort of nuances work state by state?
Yeah. So maybe I'll expand outside just not
Sure. Yeah.
Victoria only, because the similar rules apply in most states.
Okay.
The way they look into the stamp duty exception or concessions, the waiver. So the whole purpose of that is to help people to buy their main residence to live in. So that's why they're giving the stamp duty waiver on that. So the condition now become you have to be living into that property after you have settled. So if you have the capability to move back, live in the property for a year after you have settled, the criteria in most states is within the 12-month period, you have to be living into the property for, like, let's say, at least minimum 6 months. Okay.
Okay.
So, but then that is not sometimes too easy, right? Because I can't just keep up my life in the US and come back and live in the property
Sure. Yeah.
to just get that waiver. So I say in most scenario we have seen is it's hard sometimes to just go back and live into it. But if you have the chance and you can do it, then yes, that option is still there for you. You can get a waiver, not to pay the average 5% on the stamp duty. So you save about 5% cost on the purchase. But in reality is, yeah, it probably wouldn't apply to everyone, that you just can't go back and say, oh, let me go back to Australia and live into it.
Yeah, right. So the options there, you wouldn't even necessarily become resident in Australia. Like, yeah, there's obviously a few different moving pieces with, you might
Yeah.
take advantage of one thing, but not necessarily become resident for the tax purposes, depending on how does it work in terms of, like, one question I've got is, like, how far in advance do people, like, come to you? Ideally, I guess I don't want to know how late people come in practice, but, like, what's an ideal scenario? Because I know that, like, for example, if you've got a partner and the partner is a US citizen and might be wanting to get residency, so there's a timeline involved and you don't know, like, how early should someone be approaching you and saying, like, we need to start setting up some thoughts?
Yeah. So on average, for people who start to have this thinking about investing back in Australia, I say 6 to 12 months is the time that you want to plan. Maybe if you both are Australian, or you in the sole one they want to purchase as an Australian, that can be within 6 months planning. But then
Okay.
if you say, oh, my partner is a foreigner, then maybe I will need to get a PR first. So that may take a longer lead time. So, but on average, yeah, 6 to 12 months. So how we look into it is the planning first, always like, hey, what can you do from a finance and tax perspective? Is this the result that you want? If yes, then the execution part is quite quick. Like
Okay.
in general, like getting approval from the bank usually takes a few weeks only. But then the planning stage, make sure the numbers are online and your personal situation is more important.
Yeah. Okay. And you mentioned before, but I do want to clarify if you've got a partner that is not a citizen of Australia or not a permanent resident of Australia, potentially that might be the plan, but that they are not. You are still able. You still have access to the full market. Like we talked before about the FIRB and all this kind of stuff, but they look at you and say, like, do you need to not include your partner as part of the equation, or
Yeah.
how does that sort of severance work?
Yeah, and this is a very common question about like the
I'm
state
sure.
on
Yeah.
this from the state side as well. Like, hey, I don't want my partner to have too many complications when
Yes.
state look into
Yes.
it again as well. So that could be a way, and just being backed up by the Australian side as well. That and just go ahead with the purchase under the Australian's name, so then we avoid a lot of this a juggle between the two states tax for that foreign partner.
Got it.
But we can still have the foreign partner to come on board on the finance, being one of the guarantor to
Oh,
secure the
okay.
finance.
Got it.
Or it would help you in a way of increasing your borrowing
Like
capacity with the
net worth
bank
and
and the
got
amount
it.
that you need, but then
Yeah.
we don't have to have that much of excess exposure on this foreign partner. Number one is we avoid, so this rule we call stamp duty surcharge applies on foreigner. So like now your foreign partner want to have their name on the title. In most states, we have to pay this surcharge, which is between 7 to 9% on top of the normal average 5%. So you're looking like 12 to 14% on top. But we can work in a way of just having your name on it, pay the normal 5%. Your partner will just come on board as a co-borrower to assist with the lending. And this is being backed up by the family law in Australia that as long as this foreign partner can show that they have contribution to the property, the investment, by family law, they're being protected as well. So that's why some of the banks say, okay, yep, we're happy to bring on your partner as a guarantor. They are being protected because the bank also have to protect the customer as well, if their name is not on the title.
Got it. Okay, perfect. That makes a lot of sense. So, one of the big important parts to note about this is the fact that US citizens report their worldwide income. And this, I guess, is exactly the thing that you're trying to avoid. If you have an obligation as a US citizen and you've decided to live in Australia, that's fine. But the US will want to know, the IRS is going to ask lots of questions whether you live in the US or not. And in Australia, it's not like that. The ATO doesn't. If you can leave Australia and say I'm not a resident for tax purposes and stop filing and not have to worry about it. That's the difference that we're trying to avoid, right?
Correct.
Like the fundamental one. Yeah, I'm sure there's lots, but so on that's a perfect pivot into this sort of US tax space, because I'm sure we're all now thinking like, good Lord, the IRS, what fun. When it comes to so if you are resident in the US, so if you are living in the US and you've been here for a few years, you are most likely, depending on your visa status, but let's be honest, most of the people watching are going to be tax residents of the US. How does it work? Like when it comes to just reporting, like what if you buy a place and you are still living in the US, you are not planning to move back just yet or at all? How does that sort of obligation fall on you?
Yeah. So I think the main one really comes down to the income that you are collecting now from this Australian property.
It's like rental, like
The, exactly. Yeah.
yeah, okay,
Yeah. The rental side. The source of that income is coming from Australia. So number one, you have to fulfill the Australian side first to let the ATO know what is my position on this rental income. But being also a tax resident of the state, they also want to know how much you're making overseas as well. So then you have to report that back in the state. So probably not don't go too deep into the state side, but in general, as a US federal level, you have to report that overseas income. And how they look into it is the tax you pay, and this is kind of maybe linked to the second other question about like double tax, the double tax treaty, the
yes, yeah,
DTA between the two countries. So in a way of, if you are using the example that I gave, I'm making 10,000 losses. So then what do I do? I report that in Australia, but I probably report something similar, very similar in the US as well.
yeah.
There are only small things that they look into differently, but in general, it should be quite identical. That you would also record a $10,000 of losses in the state, that you don't pay tax. Okay, so that's how they make sure like you're not being penalized on that. Or on the opposite, now I'm making a 10,000 profit. I need to pay tax in Australia, which is like $3,000 at 30%. I would pay that first to the tax office, and I would then report that income in the state. But because of the DTA, I will be able to use the $3,000 credit I already pay in Australia in my US side. So at the end, I'm really looking at my marginal rate. I pay 30% already. If my marginal tax rate is below 30, I don't have any further obligation. If my rate is 35, then for sure I make that 5% difference in the state.
Got it. Okay. So yeah, you report in Australia because it's Australian. You then take that number. Obviously, there's the annoyance of the cadence of like the 6 months. There's a little bit of math to work out exactly what happened at the end of the year and like when you paid it and all that kind of stuff. But ultimately, you don't pay federally tax twice. In terms of like deductions and like what costs and for an investment property specifically, like are there any things that are different in terms of what you can deduct for repairs and maintenance and things on an investment property?
Yeah. So from Australian side first, maybe literally the rule of thumb is every dollar is somehow deductible. If you spend that $1 to collect, like to have the property to be able to earn rental income. So that include the most common one, the interest, the biggest expenses, which is interest on the mortgage.
Yep.
Then you would have the agent fee who help you manage the property, the council rate, water rate, repairs, maintenance, every of those would be included. So they in this US they look at those very similar as well. Like all these expenses can somehow be included as well. The only difference is you mentioned about one thing, initial repairs. So in Australia, we look into it as more likely to be a capital they potentially can claim one-off. But in the US, they look into like a more like a depreciation. It
Okay.
takes time to fully accumulate, like, depreciate that number that you claim over time. And there's actually maybe one funny thing is travel. I think you can claim that as well in the US. We used to have that as well in Australia. I spent my trip back in Australia
Yeah.
on to see my property, and then I can claim that as expenses. So, but there
I just
has been,
yeah,
well,
my house misses me. I need to go see it.
exactly. The same from ATO back then in 2017. It's like, oh, we have no record of you coming to Australia, but on your report, you're showing me a travel expenses. So they just have removed it
Got it.
since 2017. But there's a small difference in that part in the US.
Okay, so no more deductions for flying back to visit your house. But apart from that, so that like it's a slightly different method for how the two countries interact with it. But again, that just comes
Yeah.
down to planning. I know that there's a couple of people have also asked around like inheritance tax and like what like this is a big topic, so I don't want you to go into too much. But are there any sort of particular things that people want to look out for comparing Australia and the US?
Yeah. So I guess the good news is in Australia, we don't have so-called inheritance tax. So at the time when someone passed away or you try to inherit from your family, you don't have to pay anything to the Australian side, not until maybe you sell some of these assets. So we don't worry that much back at home. But then in the US, they do have it, but probably don't go too deep into detail. They have given you a threshold. Up until you hit the threshold, then this become a thing. So
Okay,
probably every state is slightly different. So just be
let's
reminded it's
know
run
that
differently.
it exists and not in
Yeah,
Australia, but there's something to look at. Okay, you mentioned selling because that's you're doing very well to pivot into the topics that I want to pivot into. So capital gains, like selling the property at some point. What what does it look like for someone who? So this is someone that like I know some people might be thinking about buying and then moving back into it, so this doesn't apply to them as much. But for some people, they might buy an investment property or buy a house and then decide like I don't want it anymore. How does that act differently for a non-resident of Australia?
yeah. So yeah, we still have the capital gains uh, element when we look to sell eventually. the main difference really come down to one thing that changed back in 2012, which is usually people in Australia, they can apply with so-called a 50% capital gains discount. And you probably heard a lot of news this month back in Australia talking about, oh, we want to remove it for people in Australia. But to me, it's a big topic again. I don't think really they're going to get rid of it completely. But that is nothing surprising to us, being someone as a non-resident, because back in 2012, they already removed that 50% discount from us. So in 2012, in that year's budget, they say for any non-resident for tax purpose, you no longer enjoy the 50% discount. So it's important to understand that part as well, that don't believe that, oh, I always heard about this 50% discount, so I can apply that when I sell, I pay less. Probably not the same story, being someone living overseas. So example, let's say I sell and make a profit of $100,000. I don't actually enjoy any discount. I pay tax on the $100,000.
Right.
But that discount, the
Oof.
50% discount, will still come back to you if eventually you return to Australia. So it just calculate on a pro rata basis.
Oh, okay. Right. So that you
Yeah,
can still take advantage. It's just a matter of if you stayed away
correct.
forever and ever, then no. But if you
Yeah,
do come back, that is okay.
yeah.
Good to know.
And then maybe one more thing to add on top, and I think this is more like somehow maybe more important as well, especially for those people who already have property and which the property was their main residence. So we had a rule change again back in 2020 for anyone who are looking to sell their main residence in Australia, which is the place that you used to be living. You might want to be more careful on that. That in 2012 the rule change indicate that you might lose the exemption on that property if you sell overseas. So they're gonna treat, like, worst
so
example
do you
is
want
I
to
live
explain
there
what the
for
main
like,
residence? What was the
yeah,
concept before?
yeah.
Yeah.
So in Australia, everyone can have one property that they live as their main residence, right? So that property would then be exempt from capital gains tax. Whatever profit you make on that property, you don't pay any tax on it in terms of capital gains. And this rule change back in 2012, 2020 was about if you are looking to sell that property when you're living overseas as a non-resident, that exemption doesn't apply to you. So you are now
Right.
forced to treat that property like a normal investment property. So the worst case we have seen is someone who lived in their property for like 20 years and they now decided to move overseas, being an expat living abroad. And maybe after a year, they sold the property. Okay. And they didn't know too much about this. They are fresh expat, don't know too much rulings. They sign a contract and then come to realize, hey, hang on, why ATO is asking me to pay tax on my property, which I used to live for like 20 years. And eventually end up to be a easy six-figure tax bill that they need to pay in Australia, which can be
Woof.
completely avoided.
Yeah.
So especially on main resident, you see a decent growth on their property, some profit. It could be a zero versus a six-figure tax difference if you plan it correctly.
Okay. Yeah. That's no joke. Okay. Don't get that one wrong. We did have just a quick question based on one of the things you were talking about before, which is around somebody asked around inheritance tax and wills. And this is something that's unrelated to what we're talking about today because we're not talking about the legal element. But I will say to that person, when it comes to and to everyone, if you are planning to live abroad or if you live abroad, make sure you have planned your. We're going to have a webinar actually in a couple of months about planning your international estates because it is something important. If you've got a will in Australia, you do need to think about having wills in both countries because they don't necessarily interact. So we won't go into that for today, but is something for everyone just to keep in mind if you are buying properties. Stay tuned for our upcoming webinars. Okay. We've gone sort of through the fundamentals, the obligations, the things that people are going to have to freak out about, make sure that they plan. So that people don't freak out, what are the practical steps? What are like, if I'm sitting here and I'm thinking, I haven't done anything yet, but I do want to buy a property. I've heard of, I'm already used to conveyances and I'm already used to like settlement and stuff. But like, what do I need to start thinking about? There's terms like buyer's agents and what's the first step? How does it
Yeah,
interact with you and how do you interact with those other parties?
yeah. So I think number one, being most important one is everything can be done remotely. You don't have to say, oh, I must fly back to Australia on a 16-hour flight and to get things done. Everything can be done remotely while you're still staying in the state. So there will be a few party involved in that journey to assist you. Number one is recommended maybe to use a buy agent, so then they can help you to identify the investment property that you may want to look into. For sure, everyone can do it themselves. They just look up our realestate.com to find a property they want to use the families they have on the ground. So that one is optional whether you want to use it or not.
Yep.
Second one would be the broker like us, tax accountant, to plan beforehand to know exactly what the numbers, what are options available, and go into the rest structure as well. So time frame, it can be done as quick as in 1 to 2 months. If you already have a clear goal, everything works for you. I have get the approval from the bank, pre-approval, make sure I'm okay financially. I know exactly what structure I want to go into. I have a buy agent helping me to find the property, and we are lucky enough to win the contract.
Yep.
That can settle within around 30 to 40 days. And in the process, so from beginning to settlement, I'll say 2 months, you probably can already settle. That's the quickest, but then sometimes it might take 6 to 12 months. Depends on getting finance and finding the property. Sometimes finding the properties could be quite difficult as well. These
Sure.
days, especially the auction rate is quite high. Like on average, maybe once a property is on, depends on location, of course. A property on the market will be gone in like 2 weeks. Someone will already like say, "Hey, I want to buy the property."
Wow. Okay. So in most people's cases, like you don't have to be there, but you do have to, like realistically with that kind of timeline, you're probably going to have some representative, whether it's a family member or a buyer's agent or some person on the ground that's really engaging. And like, it's a bit of an active process. It's not one you can sort of be scrolling and hoping that you sort of stumble upon something. So most people that engage you, uh, do they come to you? Sorry, just to recap, do they come to you first? Is it like walk into you and say like, I want to buy a house. I have no idea what I'm doing. Is that sort of how a lot of people start their process?
Yeah, I think the sweet spot for us at Odin is we do everything. So we do the finance, we do the tax, we do have legal team as well for the conveyancing settlement. The only part we don't do is the buy agent, but we do work with partners who
Yep.
specialize in helping expats to find a property. So usually the first step starts from our side first to look into number one, the finance, if you need assistance on the lending, to find out which lender can offer you the amount that you want. Does it align with the cash you have on hand, and what are the budget that you can look into? What's the property level that you can look into? And then to map out the structure, what are the forecasts on the income and expenses? What are your position looks like? Are you okay with that money cash flows? And eventually, then we can introduce you to buy agent, or you can use your friend or family on the ground to help you find the property. And once you have a contract, we just go back to the bank and tell them, hey, we now have secure property. Let's go ahead with the settlement. Our legal team can jump in as well to help you navigate the contract and make sure there's no missing parts. And once everything goes into the journey, usually settlement is like 42 days. So then within that 42 days, the bank will give you the form approval, sign a loan document, and again, everything can be done remotely. You can post the document back to the bank, and they will check and arrange a settlement. So after settlement, that's when you need to appoint the agent. Again, we have contacts to help you run the property. And eventually, when it comes down to the year end, that's when you need to submit a tax return, update the tax office. This is my position for the year on the property. I'm making a loss. I don't have to pay tax, and how much losses I have, I can bring forward to future to reduce my future income.
Got it. Cool. What about bank accounts and things? Like, do people need to already have existing presence with a bank or?
No, you don't have to. So in the journey of applying and obtaining the finance, the bank would just set up a new account for you. They
Okay.
would then provide you with the online banking. As long as you have logged into the online banking, you can manage your finance. The only thing probably you need to look into is you're earning in the USD. You have to transfer some money back to Australia, and for the purpose to maintain the mortgage. And on that part, because so sending money back to Australia doesn't trigger any tax because this is not an income in nature. This is your own saving. You're now sending money back to with the purchase or with the retaining of the
Yep.
mortgage. So they won't tax you on that. So everything can be done again just from FX perspective. Send the money back to Australia, maintain the repayments.
It's a really important point. I think a lot of people get tripped up with the idea like if you have money in Australia, there are obligations to tell the US government with FinCEN and things that you do have that money, but moving money between countries is not a taxable event in and of itself, because you are allowed. It's your money. It's you. And yeah,
you already pay tax on it.
Yes, correct. If you're sitting, we do have articles on America Josh as well about FX and making sure that you optimize. And I'm sure, Odin, you've got some fantastic resources as well when it comes to making sure, like, do not transfer money just by using your bank unless you have compared rates and compared the final bottom line number of what you will actually get. A lot of I like to flag this one because a lot of the time banks and other institutions will say like it's a no fee transfer, but they're giving you a crappy rate. So you are in effect paying an epic fee without really being told that there's a fee. So do make sure you look at what you want to look at is the actual number that will hit your bank account in Australian dollars or US dollars, whichever way you're moving it, and taking advantage of what the community has on offer. We will send some links after this, by the way. We've got a recording of this, and we will send some links and some resources to make sure you've got those checklists and you've got those resources for the things that you need to think about. And Pau would absolutely talk you through it if you call up Odin, I'm sure. Okay, the last couple of questions that I wanted to ask you, and these are sort of getting a little bit nuanced, but I'm curious. Do you deal with people? We did have some questions around like trusts and companies and things. Is that something that Odin entertains, or is it? I'm sure some people have some strategies behind it.
Yeah. So if we're talking about purchasing a property in this other type of structure, we do navigate on those, but also maybe a quick answer to that is it is even harder to look into those structure compared to like personal.
Okay.
Company is the most difficult one. Trust is still obtainable. So and there's still banks who can do a trust lending, but also in just the development in the last like 6 to 12 months, we are hearing the banks are looking away from a trust lending as well, even for people in Australia. So we're seeing the big four banks are going away from that area, that they don't do that much of trust lending. So maybe there will be more development in the next 6 to 12 months. That could be something not viable anymore. But still, it is optional. But there's less bank would do it. So it really come down to the options at the end of the day.
Got it. Okay, so you might entertain it as an option and say like, hey, I'd like to know what would happen if I did it. And you might say there's only 2 banks that will do it and they're not going to give you a good rate. So let's, okay. Is there a particular strategy around like investment? Is there a difference, I guess, between investment properties and properties that you will live in eventually? I know we were talking about the primary residence bits and pieces, but if you're living overseas and you're is it better to buy an investment or one to live in? Does that change the equation?
Yeah, I think from a finance, probably not too much of difference. Maybe more like personal. What's my plan on that property? I know a lot of expats would love to plan for their return eventually, which is get into the market. You probably don't want to pay with the same home that you want to the whole family to live back in like 5 years time, which then the price is like another like 30% more. So if you have a plan, maybe you could also look into buying the dream home that you want for the family at today's price rather than paying for a premium later on. But I can't guarantee that it's always like going up, but just looking back on what happened in last couple of years in some cities, in Brisbane, in Perth, in Adelaide, in Sydney, they are still going up quite crazily on average, some of them like 10-15% per annum increase. So locations is the key. And then you can always also go with the investment for now. And then eventually if you decide to go back to live into that property, it would just turn into your main residence. So I guess if you're coming from a family home perspective, find something that the family would enjoy, that would fit the family need, school zones, all the factors that will take into account. If this is more from a financial investment perspective, then maybe you want to go for things that can have growth, that we can eventually make more money.
Yeah, I think it's a great tip. I know we've actually talked about this on a previous webinar where we talked about this idea of sometimes you get sort of lost in the romance of what you want to do, and it's like sometimes there are like, and I guess that's your job, is to push back a little bit sometimes and say like, hey, let's think about realistic timelines, and are you actually going to move back in the next few years, and if not, let's build that grows wealth in the short term, and then you can pivot. All those kinds of fun things. Are there particular like mistakes that people make? Are there like a couple of, people are always asking me, what are the red flags that I should look out for? Are there any particular things that come up that you sort of you worry about or
Yeah.
you think about?
Yeah, this is what we call a siloed advisor. That you're having a siloed advisor who is just my broker in Sydney, my accountant in Melbourne. They are from two different companies. They don't ever talk to each other, and I being the sole ownership to navigate between them to pass on their message. So, and that's often caused problems. That, oh, your banker say I can get you finance, and then your accountant say, hey, you should buy it in this structure, and eventually, let's say in the trust structure, the accountant say, oh, you should buy in the trust structure that give you the most benefits. But when you talk to the bank and they say, no, hang on, we can't lend you in trust. So then
Right. Yeah.
that was the mistake we have seen quite often, that eventually you go ahead with the signing of the contract and you lose your 10% deposits.
Yeah. Okay. Got it. So it really is. It's looking, zooming out, big picture, planning in advance. But yeah, it's that. Okay. Siloed advice. I like that. Pau Lam, Odin Mortgage and Tax. Thank you very much. If somebody is watching and they're like, okay, this has been great. I understand my next steps. What is the consultation process? Like, how do they get in touch? I know I'll send a link out so that they can connect with you, but
Yeah.
in terms of what, yeah, is that the best way to do it?
Yeah, so feel free to get in touch with us, and we can have a consultation to help you navigate, number one, the lending, the tax structure, to help you understand your personal situation, your numbers, to see what options you have and how can we move forward. And if everything kind of worked out, then for sure, see we can assist you on this journey of investing back in Australia. I think back to the point, the advantage of Odin is we have every infrastructure in-house. You don't need to talk to three different company, four different company to do one thing. Everything can happen at Odin. We can look into everything for you on this journey.
Awesome. No, this has been absolutely wonderful, and I sincerely appreciate you taking the time, and I'm sure all of our attendees do, because you've gone through all sorts of information that I think most people would have taken a lot from this. Yeah, we will send a follow-up email. We're going to have a recording of this, so if there have been bits of information that you want to recap on, or if you haven't quite remembered a few of the things that we talked about, you will get a recording of this, and it will be available on YouTube. America Josh does do webinars every single month with different experts like Pau, where we talk about all sorts of different issues relating to expat life, from culture to the fundamentals of tax and purchasing a home. So please do make sure you subscribe to our emails and make sure that you listen to us. Connect with Odin Mortgage and Tax, and we would love to make sure that we keep part of this conversation. Pau Lam, thank you very, very much, mate. This has been fantastic.
All right, thank you for having me, Josh. Good evening to everyone.
Have a lovely night. See you later.
All right, see ya. Bye.